And Valerie, I have to say, you watch these markets continue to push higher, even when you're looking at a down week like last week. You're still talking about the Dow and the S&P, both less than 1% away from an all-time high. Just makes you wonder what eventually will knock these markets down, if anything.
Well, I think the thing that would knock the markets down would be some type of weakness in earnings. But quite frankly, that is not what we're seeing. The earnings season so far has been quite strong. We've had about 59% of the S&P 500 report so far, and 88% of these companies have beat on revenues as well as earnings per share. So corporate profitability has actually exceeded expectations overall. And I think that companies have really adapted and pivoted in the face of the COVID pandemic and other changes and disruptions in their business models, and that's what we're seeing in the numbers.
All right, so we've got the Fed. We know that this meeting next month is coming up at Jackson Hole, and Jay Powell seems to have said, okay, not so fast. That may not be where we announce something. What do you think? Because that would be the one thing that I could think would maybe shake a little confidence if people thought the Fed was going to move sooner rather than later.
It very well could have an effect on confidence, but I think that that's something that's very difficult to forecast. And so I really try to stay really close to the fundamentals here. And I think what we're seeing is that regardless of how rates are progressing, companies are actually investing in their businesses and they're looking at future growth opportunities and adapting to this changing environment. As we look ahead at this week, I'm focused on what's happening at General Motors, given their strategy focused on electronic vehicles. And I'm also hoping to get an update on the chip shortage there. If you look at Cigna has launched a new telehealth initiative. So again, they're focused on future growth strategies. And so I'm curious to hear how that's progressing and what they're seeing in terms of their forward-looking guidance. And then Eli Lilly. Eli Lilly has an Alzheimer's drug in development. People will be focused on that, given the Biogen IDAC drug that was quite controversial. And also Lilly's sort of a bellwether, if you will, for the pharmaceutical industry. So again, I really try to stick to the fundamentals. Very difficult to forecast what the Fed will do, but generally, if you maintain a reasonable level of diversification, you should be fine.
Valerie, do you own those three stocks, General Motors?
We do own those in the strategy that I manage, yes.
So you're going to be listening to just check in on each of those items to make sure, okay, I want to continue to own this or I want to buy more?
Correct. Yeah, that's generally what we do. Yeah.
You made kind of a bold call. You said you don't have a year-end target for the markets at this point, which is smart. I mean, it's kind of crazy to try and get out there. Would it surprise you to see the markets higher than this, or just in terms of not having a target, but do you have a general direction?
I think generally I'm constructive on the markets. I think that there are opportunities really across sectors and across different styles of investing. And so we're really seeing an environment that's actually quite rich for stock selection. And by that, I mean that there is a lot of dispersion among the performance of companies. And that creates a very attractive environment for picking stocks and putting together a portfolio that has some interesting idiosyncratic characteristics.
Shepard Smith here. Thanks for watching CNBC on YouTube.